Here's how NASDAQ moved today, a clean 160-point fly from the London high. I'll show you what caused it, the strategies that worked, the mistakes most traders made, and the lessons that will make you trade like an institution next time. So stay locked in. On the chart right now, as you can see, I've already drawn up some key levels that we're going to be focusing on today. So this is the lowest, this is the highest level of London session today, and this is the psychology level, which is around 28,800, and this one is 28,900. I'm going to be showing how you could have gotten into this nice buying opportunity right here that happened during the new session. As you can see, it was not that big, but the pips were worth it. There were a few things that you need to understand. First thing, market structure. Second thing, area of interest. Third thing, a candle confirmation. Fourth thing, market shift. Fifth thing, point of interest. And the last thing was a liquidity level. You can see that the market was moving in a nice bullish move before the new session opened around here at 3:30. Because you can see that the market comes from the downside. So let's just take it from here and say this is our higher low, this is our higher low, our higher low right here. Now until right here, then the market continued moving up. So the market structure was bullish. The next thing for you was to find an area of interest. The area of interest was this London high right here. And after the area of interest, we had to have a candle confirmation that's going to be showing the bias of what's going to happen during the new session. And you can see that right here, the new session opened 30 minutes after the new session opened. There was a candle confirmation right here. This is a candle confirmation which is showing us a bullish bias. This candle explains itself. Then the sellers tried to push price back down, but it failed. Then the buyers pushed it back up, and at this area of interest, the buyers are the ones who won. So now that we have the candle confirmation, the next thing was to find a market shift that's going to be supporting the bias of this candle confirmation, which is a bullish bias. But first, since we are on the 30 minutes chart, we have to be looking for trades after 4:30, since this candle formed from 4 p.m. until 4:30 p.m. So we're going to be looking for trading opportunities after this kind of confirmation had been fully formed. So let's move down to find our market shift. And for a market shift, it's good that you go on the lower time frame. For that kind of confirmation, it formed from 4 p.m., which was around here, until 4:30, which was around right here. So we have to be looking for trading opportunities from here to the right as the bars create themselves. Since the bias is bullish, we have to be looking at our previous high to see what price will do at that high. And in this case, that high was this high right here. And as you can see, it was crossed right here, creating what a market shift for us that's supporting the bias of that candle confirmation, which is a bullish bias again. So after having that market shift marked out, the next thing was to find your point of interest. And in this case, a point of interest was this buying favorite gap right here. After this market shift, price started tapping into this point of interest. Price went up a bit, but then it came down and tapped and collected more orders. But I'm gonna lie, this point of interest, it was not giving a clear chance on how you're gonna be executing this trade. But before executing your trades, you have to understand liquidity. So liquidity is just a level whereby most traders place their stop losses, and at that level, both sellers and buyers are at that level, and one is gonna win. So this was our liquidity level because it was our previous low right here. Liquidity right there. So for this entry, guys, I'm gonna lie, it was a little bit confusing, but if you understood the discount and premium concept, you would have entered this trade. So this was a low and this was our high. As you can see, price bought below the 50%, and below the 50% is the discount area. Obviously, the buyers are willing to buy at a cheaper price. So for an entry, even though it was not that good, but let's just say you entered on this 50% of this favorite gap right there, and you put your stop losses where on the previous low, and you TP obviously at the next area of interest, and you can see that the liquidity was not taken out. The next area of interest was this psychology level, but when price came to this level, the sellers didn't have much power to push price down, and price continued moving up to this next psychology level right there. As you can see, the TP was met the following day around 1 a.m. That's how you could put into this nice buying opportunity. And as you can see, everything has been checked because the market structure was showing us a bullish market structure. Then we had an area of interest, and there was a candle confirmation that showed us a bullish bias and a market shift supporting that bullish bias created by that candle confirmation. Then a point of interest, which was a buying point of interest, which was also respected. So everything was pointing bullish, guys. There was no need for you to be looking for selling opportunities. So that's how you could have gotten into that nice buying opportunity. As you can see, the ratios are fire. And if you enter this trade, you will have risked about $22 and your TP around $168 per trade. Easy things, guys. Not knowing where to set your TP. You can see here that when price went to this potential TP, price started showing us that it's still supporting that bullish move, and there was no need for you to close all your trades. Would have closed some, but not all of them. As you can see, after that, price continued moving up to the next TP level, which was a greater TP level. That's the mistake most traders made, and that's what separates the retailers from the institutions. Lesson of the day: when Monday makes a clear high and a clear low, those are area of interest, and you can find your trading opportunities during the trading week on those levels. So just mark them out for the rest of that week in case there are any potential opportunities around those levels. If you learned something today, drop in the comment and tell me which part helped you the most. I'll see you on the next trading day, guys. God bless.